There we go.
Hey, Chris,
Okay.
is this your actual chart setup? Like you have these colors?
This is J-Lo's. I'm on her
Okay. Yeah, I was going to say.
setup right now. Yeah. Okay, so this would be another potential entry for like a jump the creek type buy. And remember, every time that you get into a trade, you have to also take in mind your risk to reward ratio. So let's see. Do you remember what it was that we talked about? Risk to reward ratio. Right, the 2%. So we were going for, did I tell you to do 1 to 8? I believe I did, right? All right, so let's just see 1 to 8. Okay. Yeah. All right, close enough. All right. So at all these points of interest, you could also execute a trade just like this.
Right.
Okay, if it comes down to that area. Another thing that we can do here is we can measure from this new low to this high, we can measure a Fibonacci and also have the 71, 78, or 88 levels to measure where it could also retrace to.
So it was the 71, 78, and 88 that you used?
Yeah, 70 or 71.
Yeah.
I use 71, and that's kind of like literally like where our arrows are. You see it?
Yeah.
So it's like, I could just eyeball that because like, I'm looking at the imbalance from the wicks, but it'll usually be the same area as 70, 78, or 88.
Mhm.
Right. But let's see if this becomes a potential entry. If not, if this gets stopped out, then my next areas for a potential entry would be right there. Okay, so see on that one, I would have gotten stopped out. Yep.
Wow.
So 88, that was it. 88.6, perfect. So this right here, that was the mitigation right here. So all of this would still be considered phase C, just because it waited out until it came back there. So that was a pretty big phase C, pretty small phase B right here. And so that's one thing that you have to kind of keep in mind is that it's never going to do it by the book because it would be too easy. You have to play chess with it. But it'll eventually come down to those areas as long as you have those areas marked up, And you could have even done this. Let's say that you took that trade there and we lost. Okay. And let's say that you had another entry at 70. So if you had another entry right there at 70, somewhere right there, okay, you would have lost another one. Okay. Let's see that we get another entry at 78 even. We would have lost that one as well, barely. But then we had another entry right here. And that one activated perfectly, which is at the 88.6. Then even though we would have lost 4 times, we only lost 2%, right? We only lost 2%. 1, 2, 3, 3 times. Yeah. So we would have lost 2% 3 times, so 6%. But even on a 1 to 8, exactly. So this is why I tell people don't be scared to like get into a trade multiple times because, sometimes people always tell me, man, I'm losing more than I'm winning, and I'm like, how? Like the only way that that's possible is if you're not using, this 1% rule. But this is just, one way to kind of like see it. So now that we got that entry, okay, cool. So we can get rid of these entries just to like,
clean up the chart.
Just to clean it up a little bit so I can continue to show you here. Okay, so now we got that one trade. Even though that only made us 2% on this trade, we know where the market is going now. So now we could be looking for another entry around the preliminary support area. So I'm going to look for this to break out and then come back to preliminary support area for another entry.
Are we still in phase C or are we in phase D?
This is phase D now.
D? Yep, cool.
Yeah, so now we're in phase D.
So is that the buying climax?
The full phase C is phase D is jump the creek.
Right, yeah.
Jump the creek.
Yeah. And like literally right here, where it broke out of the preliminary support, that was like because as soon as it breaks the preliminary support, it'll come back and test it very slightly, just like it did right there with that particular candle.
Mm-hmm.
So that could have been the other entry. So let's say. Okay, so if your entry looked like that, okay, now you have two entries. Now you're up 16%. And the jump the creek one is one of the easiest trade setups because it'll usually go straight into your target. Right, it's already like phase D. Phase D, it's picked up a lot of momentum, so now the market starts to become very bullish. But that momentum happens after all of this. It doesn't happen when it came down to this area, which is where most people would have bought and held it for a long time without it really getting to their particular targets.
Mm-hmm.
Okay, so now the market is going to start going up, and here's one thing that I believe could still happen. I believe it could still come down for another entry at the preliminary support area. So I think that it could potentially still be coming down. Now I always look for these little gaps. So like if you can see right here, above here is like a somewhat of a gap. So let's draw like another arrow right here, right here. So I could see a potential entry somewhere around there again.
Mm-hmm.
Somewhere even around here. Okay. And I could, I wouldn't be scared to take either one of those because I know if I lose, I'm just losing 2%. So I can make it all back. I think it'll go down to this area though. I really do. And this would be considered markup. So markup, also creates equal lows, equal highs that then get taken out. Same way. Speed this up a little bit. Sheesh.
Yeah.
Yep. So eventually, it came down there. Now I wouldn't have everybody would be like, "What do you think it's doing? What do you think it's doing?" And I'd be like, "I don't care because unless it's going to my point of interest, I really don't care what it's doing." If it's nearing your point of interest, you have an alarm set, and it's like, all right, take the trade, take the trade. So let's just say that we took it right here. Okay. At this point of interest, we would have got stopped out. Okay, cool. Get in again. The second point of interest. Okay, let's see what happens. They almost came and took us out, and then it went to its target. And so that's where it's at right now. All right. And this is actually a little bit lower because the green area is right there. If we follow like this line right here, that was like perfectly right there.
Perfect entry, yeah.
So that right there would have given us, and then let's just take away this Fibonacci. Actually, let's move this. So we move this up to that high. So from this low to that high, it came and retraced right at the, what is that, the 70 or 61.8%.
Mm-hmm.
So on a higher time frame right there, that came back to the golden ratio. And that's usually a good point of interest for jump the creek because at jump the creek it'll usually go up to the preliminary support. I don't necessarily always use 61.8. I wait for these because these are considered like the sniper entries because 61.8 sometimes does get you an entry right where liquidity builds. So I tend to avoid those, but on this one, we had that imbalance that kind of gave us another confirmation for that trade in particular. So now that this is happening, I consider this to be markup. So I consider the market right now to continue to be bullish, especially because it just created a newer high, right? And so this is in real time right now. And so the market is now moving, and I'm anticipating it to continue to go bullish some more before it starts creating a buying climax, etc. But that's basically just a rundown, a play-by-play rundown on how I would look at various trade setups. And so total we got those three plus this one, that's 4, 5, 6, 7. So 7 trades. Let's say that was a week, right? So 7 trades in a week. and I lost 1, 2, 3, 4, 5. I lost 5 out of 7 trades. Oh, I'm sorry, no, this one we won it. So I lost 4 out of 7 trades. So we lost 8%, and we made 16% total. So still double, and that was just still getting into some trades that were a little risky. So that's just like one way of like how a regular trading week should be going, and you can do that again on any time frame. I was just looking at a 3-minute time frame so we can see a lot of patterns like here early on. But let me go ahead and clear all this and let's go to another example.
Just before you do, what made you look there to start with?
So first we look at whether the market has been downtrending or uptrending, and so I could see that this right here kind of looks like a distribution. So if this right here kind of looks like the distribution and it's creating the equal highs that then got taken out, right here, this was like the buying climax, got taken out, and then it came back. Remember, the market never leaves without us. It always ranges to come picks us up, and then it breaks this would be like the preliminary support to the downside. So it breaks down to the downside, starts going all the way down, catching a lot of momentum, and then when it gets to a low point, it doesn't immediately go from here all the way back up. It has to repeat now the same cycle. So now it's going to create other points that the markets that's going to attract buyers and sellers that then get taken out right here, like we saw in phase C, and then it's like the same pattern repeats all over again. So this right here is like the markup, and so now it's going to go back up to another point of distribution.
Yeah.
Because the market always goes like this. It goes up and down, up and down, up and down. But this is the nature of it in between those up and down moves. And you can see right here. Not on this one. This is the one that everybody sees. Look at this one. It's kind of like two of them put in together. And this is like the true nature of the market right here. So it'll, get the accumulation right here, markup, and then distribution, and then mark down, and back to accumulation. So this is like how the market flows consistently, is by making
Chris,
this.
could you I'm like pointing at the screen. Third row down, the one where it's like 4 market phases.
The colorful one.
So go down. It's like orange, black, and green. Up.
This one?
Yeah.
Yep.
I remember seeing this months ago.
Yep. Yeah, this is literally like the 4 phases of the market. Same as right here. You have the accumulation, markup, distribution, and markdown, which is the bearish and bullish qualities of the market. So accumulation and distribution pretty much just means consolidation, but where it's consolidating is important. Is it consolidating because it just came from a distribution, or is it consolidating because it just came from an accumulation area? Because remember, one is always followed by the next. So there's always an accumulation, an expansion, and then another accumulation, and then a retraction. And this is just the first question you ask yourself anytime you're getting into a trade, because if you know where you're at in the trade, then essentially you can still get in. Let's just say that you're very experienced, you've mastered these 4 phases, you know exactly where each phase is going after the last. You could open up the charts and it could be on markup phase right here, and you could be looking for buys. And this is why they say trade with the trend, because if it's uptrending, why not get into some buys? If it's downtrending, why not get into some sells? If it's accumulating, and let's say that it barely started phase A or B and you're experienced, why not play off the accumulation or the distribution and just buy, sell, buy, sell, buy, sell, and then wait for phase C if you wanted to like play it that way. And so it's like once you know exactly what's going on, now you don't just have to wait for phase C to trade. You could trade in between it because you also know what's happening in between. But the first step is just identifying the 4 market phases. So we did that on that chart. Let's go to another chart and do it all over again. And do you want to? Is there any chart in particular that you use, maybe?
No, not really. Which one, sorry?
GU.
I like GU.
I've been in a buy in GU since, let me tell you, since 124.754.
1257.
124.754.
Oh, so you've been here. So you've been in it for a minute.
Yeah.
That's awesome.
Yeah.
And this is again a 3-minute chart, so this is why it looks like that, right? 3-minute chart. Let's go to like a low point of interest. See if we can spot some accumulation. Actually, I don't like this. There we go. Just because GJ is like too volatile, so I have to go out to a higher time frame a little bit. But you know, here's like the basic instinct of equal lows gets taken out. This is just past trade setups that we've called out here. But
Mhm.
let me go to the bottom down here. All right. So here we go. This is where our preliminary support would be at right here. So we're going to draw a line. And remember that jump the creek is usually around the same area as the preliminary support. So it's another good indication if it's already completed phase A, B, and C, and it's already near the preliminary support area that it was in the beginning. It's a good indication for that jump the creek sell or jump the creek buy. So preliminary support, selling climax, automatic rally, second test. And then this right here is schematic number 2. So this isn't schematic number 1 because it didn't come down and like make any lower lows in this. This came up just a little bit, but it didn't break these right here. So on schematic, if you see, so on schematic number 2, it doesn't always come back down to that area. So here I would have just looked for the lows right here, and I would have looked more for a break of liquidity right there.
And this is phase B?
Yeah, phase B would be right here. Just because that's what phase B does. It gives you the indication of, you know, whether it's going to come down some more or not. So this would have been the entry right here. This would have been the second entry right here, and this would have been jump the creek. So it would have been like that. Pound.
We got
Right
10
there.
minutes.
Yeah, and I'm on the 5-minute chart, so that's why it's also a little choppy. But that right there would have been your 3 entries, and you know, both each of these 3 would have gotten straight into your profit areas, and you would have been really good. Especially this one, because remember, jump the creek is the one that's the most volatile. If you get a trade at jump the creek, that's the ones that are like instant profit, very little to no retracement. And then you look for markup, and so you know now it's like markup right here, and you would have looked for equal lows on markup right here, liquidity to break right there. And it always kind of creates like that same little like thing on accumulation as like phase C does. It always comes back, picks you up, and then comes back, you know, jump the creek right there. So it's like those 3 trades you can use like fractal geometry to get in even at markup. Because it'll markup, it'll usually do the same thing, create equal lows, break the equal lows, come back and do those same 3 things. So it's like those 3 patterns right here. Boom, boom, and boom. And then let's see, goes down to area, and then it comes back to fill in those other imbalances. So it's like good to just have like these lines drawn up at the other imbalances because it'll just give you a good indication for the future. So you always got to look left to get right. So every time that you see market potentially come into certain points of interest, you just look left and see, okay, is there a little bit of imbalance? That right there is usually enough confirmation for me to get into a trade if I know it's in markup, because it's not going to come down to a accumulation. So I know that, you know, now it's just coming back to fill in the imbalances. So it would have been another big one. And now it's starting to get into that distribution area. So now right here, I could see that this would be like, you know, the buying climax, right? And it's creating some equal highs right here. So I could see this potentially breaking out a little bit and then starting to come down and downtrend again. So GU right now in the 5-minute, I would see it potentially going bearish here very soon. And let's see. Let's go back even further. So here's another accumulation right here. Now this accumulation, there we go, so you can see everything. This accumulation was schematic number 1 because it came back down, broke the equal lows here, but actually came around the same area as the selling climax. So this right here would be more schematic 1, but you know, you see it right there, the equal lows. This would be phase C. You have preliminary support right here, selling climax, automatic rally, second test. Phase B, remember on phase B, sometimes it creates a lower low. So if it creates a lower low in phase B, a lot of the times I'll play it there as well. Not always does it do that, but sometimes it does. And that's kind of like, you know, you're getting into the buy right here. You know, it's gonna like be long term. So I'd rather get into the buy at phase B rather than at the selling climax, just because the selling climax usually gets, you know, captured by the low at phase B. And this is also actually, this is not schematic A, this would also be a schematic B, or schematic number 2. So this would also like be where B makes the lowest low, and then it comes, creates equal lows that then, you know, drop a little bit in phase C, but don't break the lowest low here. So it's like both of these as the first example, same thing. But you can kind of see this pattern, right?
Yeah.
It's like it's the same thing all the time. It's the equal lows that I look for, the break of the equal lows, the little mitigation play right here, and then the jump to creek play. Those are like the 3 signature trades that I look for. And like I said, you can find them on any time frame, because I mean, you don't have to wait too long if you're looking at smaller time frames. You know, on higher time frames, they won't always do that. But on higher time frames, I also encourage like you upping the risk to reward to like 1 to 10, 1 to 15, even 1 to 20, or 1 to 30, like Matthew does, because the higher the time frame, the more that it's going to range as well. But let's go into another chart. GBP JPY, which is very similar to GU. Let's see. Let's go to a higher time frame now.
There's only 4 minutes left, BTW.
Oh yeah. If you want, I can send out another link, because I know you also have to go to.
No, I cancelled it. I just said I'd call her later, so we can just reuse it if we want to hop off and then hop back on again.
Oh, okay, cool.
Thanks.
Want to do that?
Yes. Yeah, sure. If you want, let's do that.
I'll end it.
Okay.